Welcome back to my more important analysis videos on Tuesday 19th of June with me, Rich Pair Market Analyst at Hantec Markets. Looking at dollar yen, which is the big mover to the downside today. The yen is a big strong outperformer on this risk aversion. And we've seen that, I discussed yesterday that this uptrend was still intact, and I was questioning it by the fact that the candles were pretty uninspiring in recent sessions, and the market, the momentum indicators were not all that great either. And now we're seeing this sharp move to the downside, which has broken the pivot at 110 big figure. It's broken the uptrend. It's broken a higher low at 109.90, and you've also got these momentum indicators which are deteriorating now. So there is a deterioration going on this dollar yen chart. Now, if we start to see the market now failing underneath the pivot of 110 figure, then you could start to see the market just starting to roll over again. I mean, I've been sort of discussing the fact that this is a range, and it certainly looks as though the moves in the last couple of days, failing at 110.90 underneath the 111.40 level, seems to be as though the market is trading within the range, and momentum indicators sort of reflecting that as well, with the MACD lines sort of just buzzing around, just sort of dipping a slightly lower. But the stochastics, if they do cross back below 80 decisively, then that's a sell signal. RSI back into the low 40s, maybe if that went below 40, again a sell signal. It's sort of all sort of suggesting that the market could be now sort of angling towards a pressure on the 109.17 low that we saw earlier in June. And you see here on the hourly chart where you're sort of now trading decisively below all the moving averages. Momentum indicators more correctively configured. Look at those MACD lines. A little bit stretched, you could argue, near term, so any sort of unwinding move is a chance to sell. I've put the crosshair at 109.90, which is that low, but you've basically got a sort of a pivot A range between sort of 109.90, 110.25, which I suppose is now a sell zone within this. So I'd be looking out for rebound into that to sort of start to fail and fall over, and then that would also be around or underneath all these moving averages as well on the hourly chart, and give the RSI a chance to sort of unwind back into the sort of 50s area on the hourly as well. So I think it's looking like a bit of a change in sentiment, and it'll be interesting to see how the market reacts in that near-term pivot between 109.90, 110.25. That will be the key. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.